there, it's Julie Broad with Revenue.com, and I'm sitting here with Jim Shields of Jacksonville Real Estate Wealth, and he was kind enough to take a moment to chat with us a little bit about the frenzy that's going on in Canada when it comes to investing in the US. And so I asked Jim if he would share a few things with us. First of all, what is the biggest risk you think Canadians are facing when they invest in the US?
Well, thanks for having me, Julie. Good to see everyone. And the biggest risk that I see today for Canadians coming into the U.S., besides not being educated first, I think it's absolutely crucial if you're going to be throwing money into something like real estate. And U.S. real estate and Canadian real estate is very different. You have to get educated first. But besides getting educated first, which I'm sure a lot of people that work with you at Revenue are doing now, it's working with the right people. And I think that's in a number of businesses, but probably no business more that I've seen than real estate investing, especially when you're investing such bigger dollars. You're not buying into a $1,000 property, or at least you shouldn't be, and we can go into that later, but you're investing a large amount of money, and it's very important to know the right type of property to buy and where, get the right rehab done, and get the right management and tenant in place to make the investment be successful. And if you don't have the right team, then you're going to be in a lot of trouble. So for all you Canadians out there, even more important almost than the strategies in the markets, it's having the right people to work with. And I highly recommend that you find the right team of people that have been there, that have done that have a track record, and that you can even see some of the results that they've had for their other investors that they work with.
Yeah, and I didn't say it when we started, but Jim and his partner Brian have done, I don't know, 300 transactions?
A lot.
They've done a lot of deals, and I think that kind of track record and the success they've had in 11, 12 years of investing?
12 full-time.
12 years of full-time investing is the kind of track record you want to find. And of course then you want to ask them, who have you made money for, and if they will even let you speak to them. I think that's huge. That's one of the things we do with our partners is we let them speak to people that we've made money for, and any of our partners they want to chat with, they can chat to find out, how did this work out for you? And I think that's huge. And Dave and I haven't thought about investing in the US right now because one of the things that concerns us is making sure that there's somebody on the ground there that can handle our investments. So I can tell you that if we were going to put a penny into the US, we would do it with these guys. There's no question in my mind because of their track record, because they've done the research, and they've got a great team on the ground. Now, one more thing before we leave.
Sure.
What do you think is a good strategy for Canadians and for investors in general?
Okay, that's a great question, Julie. And I know all of you people out there, especially in Canada, are getting hit with so many supposedly opportunities and strategies and this and that. And I can simplify it down to a very easy recipe. And by far, and we've had people a lot further down the road than us even mentor us and say the same thing about what's going on now. If you're going to come into the US and invest and make the most of it, I recommend that you come in with the buy and hold strategy for long term. If someone's telling you to come down and try to start flipping property or wholesaling, that is very, 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 very hard to do in a buyer's market, and you're swimming against the tide. Plus, you're trying to do that from Canada. The most successful people I know that do that niche, they live in their market, and they're very entrenched in that market. It's very hard to do those niches from the outside, let alone it being a buyer's market. So I recommend you use the simple buy and hold strategy in houses that are in solid areas. Like Brian had talked to you before, or Dave before, about the right fundamentals of population growth, economic growth, healthy supply and demand, affordability, and desirability. And affordability can be a tricky thing because a lot of you Canadians are getting sold into very dangerous neighborhoods with no fundamentals, no population growth, population depletion, no jobs, just horrible conditions that are only going to get worse as the baby boomer trends continue to move more populations into different areas. So you want to go in the areas with a path of growth and also invest in neighborhoods that you'd be safe walking down. Because I can tell you one of the biggest difference between our countries is our bad neighborhoods are a ton worse than yours. And I'm not speaking down on America, but we have 300 more million people, so we're bound to have a few more bad seeds. So I recommend you go with the buy and hold strategy. You do a full rehab up front, you earn a nice cash flow now, and let the market do its job. And make sure you get in the right market with the right people.
That's fantastic. Thank you for your time.
You're welcome. Thank you.
Thank you.